now, so I discovered that some of you did not get the uh, the settings, but majority of you actually got it, and that's very impressive. But some of you didn't get it. Okay, when I was talking about the moving average, I also find out that many of you have already fallen in love with the EMP moving averages, and that's beautiful. Okay, years ago I fell in love with it too. I told you the first set of money I made trading financial market was through these moving averages. That is not how I trade now, but I don't use, I'm a naked trader right now. I don't use any indicator, but it is beautiful. It is beautiful. It gives you less you don't need to stress your brain too much. Give you less stress on your brain, less stress on the all this pattern like that. But then it only works effectively well when the market is trending. Moving averages work effectively well when the market is trending. Are you hearing me? It works effectively well when the market is trending massively. It works like magic. It works like ritual. My goodness, when the market is trending, whether bullish or bearish. But then it will not, it might disappoint you when the market is ranging. Okay. But then, there is no perfect, 100% perfect strategy anywhere in the world. It does not exist. And so, the moment you discover that market has started ranging, you just come out of it. Just come out of it. And then maybe take another instrument that is trending at the moment and use it to trade it. It's beautiful. And while as a student in school, undergraduate, you can actually make a lot of money from here. I've had students who started sponsoring themselves just with this simple strategy, because if I trade physical class, if I take physical class from day two, I usually reach this aspect in day two. So I just teach them on day two, and then they give an assignment. All of them come on the third day to submit the assignment before we actually continue. And so it's a powerful moving average. I see. I used it years ago, 6, 7, no, not 6, 7, about 7 years ago. This was where I majorly, that was my strategy in trading, and I make a lot of money trading it. Okay, as a beginner then. So I wanted to master it. I want to go through it again, and I said I will teaching you two indicators. Two indicators. This one, the first one, this is exponential moving average EMA. And then I'll be adding ADX to it. This combination is powerful. The combination of the two of them, but we have not gotten to the combination yet. I'm still trying to establish the EMA 10, 50, 200. You will love it. You will love it. My goodness, you will love it. So let's continue. I said the moving average 10 is red in color. Moving average 50, exponential moving average 50 is blue in color, and then the black and the 200 is black in color. This is what it means. 10 is red, 50 is blue, 200 is black. 10 is red, 50 is blue, 200 is black. So when the red line crosses the black line from down up, buy. When the red line, that is EMA 10, when it crosses the blue line, EMA 50, from down up, you buy. It's a bullish signal. It's a buy signal. So when the red line crosses the blue line from up, down, sell. It's a bearish signal. It's a sell signal. Okay, when the red line and the blue line, both of them now, cross the black line from down up, is a strong buy. I used to call it buy, strong buy. Usually move massively. Okay, most time, not all the time, most times it moves massively. Then when the red and the blue line, both of them, cross the black line from up down, is a strong sell. It is a strong sell, and you're gonna love it. You're gonna love it. So let's dive into the charts and let's see how it works. First of all, I want to go to crash 1000. Crash 1000. Look at crash 1000 now. Crash 1000. Let's see from here. The red and the blue line have crossed the black line from up down. That was rule 4. That was rule 4. When the red line, when the red and the blue lines, when the red and the blue, when the red line are supposed to be, when the red line, okay, so let's see, let's cancel this, but in essence, so no, 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 no. When the red and the blue lines, let me make this one plural then. When the red and the blue line cross the black line from up down, strong sell. Mine oh mine oh mine. See now, when the red and the blue line here now, both of them are on top. They have crossed the black line. Don't forget how we did the setting the other time. I told you you will go to insert indicator. I already show you a video too on the group how you can do it on your on Android phone or on an iPhone. Insert indicator trend moving average. Click on moving average. Set 10. Okay, 10 period 10, and then exponential method is exponential. Apply to close black line and style. For the red it is for the 10 it is red color. Then you click OK. Then you do the same thing for you do the same thing for 50 indicator trend moving average, then exponential. This time around it will be 50, it will be 50, then shift 0, exponential 0, exponential method exponential apply to close, then style. For the 50 it is blue line, then you click enter. Then you do the same thing for the black. For the 200 moving average, then you click shift apply to, then the color for that one is black, and then you click OK. You have already done that in the last class. So when the red and the blue line cross the black line from up down, boom, see the massive sell, see the massive sell. And then what do? Your stop loss will be, as it crossed that, the stop loss supposed to be the last swing. If I were you, I'll put my stop loss here on the price of 4845.0185. And then there are two ways to do your take profit. By take profit, usually is either you trail your stop line, your stop loss, trail your stop loss, or you use the blue line to do your take profit. So what do I mean by the blue line? If I put my stop loss here, and then as soon as the market move a little bit in my direction, this will be my entry. Somewhere around here will be my entry. Somewhere around here, where the price, when this line cross, most likely it is this candle that will be forming. This candle or this candle here, this red candle will be the one that is forming at the time both of them were crossing the black line from up down. So I put my entry there. So as soon as price moves to somewhere around here now, I'll bring my stop loss. I bring my stop loss from here to this place. That's what we call break even. That's what we call break even. It is called break even. Break even. Break even. It is called break even. It's called break even. Here, break even. And then that means that my entry price has now become my stop loss. So that I'm not in profit yet, but I cannot lose on that trade again because I already come to break even. So I will now watch. As I'm watching, I'm shifting my stop loss to the swing. I will shift it to this place. As the market is moving again, I will shift it. I will shift it. I will shift it until I'm just watching the swing now. Maybe this is the last swing here. I will shift it to this place. I will have made profit from my entry is here, my stop loss is here, my entry is here, I will have been here. Or you can decide to say, I will not close until a reversal candle closes above my 50 moving average. 50. That means that will be here now. I will leave this trade to be on as long as no candle intercepts the blue line here. So here now the candle has intersected the blue line. I'll be taking my entry from here. I'll be closing. Okay. But then if you are using trailing stop loss too, and you are here, 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 you'll be out in this place. You'll have been out in this place. So that is how to trade this. So then, and I told you now, there's a version of you trading every cross. When the red line cross the blue line from down up, you will buy here now. You're supposed to be buying here now. Ordinarily by that rule. Okay? You will buy here, you will sell, you will buy, you will buy here now, you will sell here, you will buy here, then you will sell here, then you will buy here. But I said, okay, let's reduce our errors as much as possible. I will always be taking trade you know, in the direction of my 200 moving average, 200 moving average. So if the candles are below the 200 moving average, I will only be taking sell signals, only sell signals. If they are above the moving average, I will only be taking buy signals. So when it's crossing, like here now, I told you I will not buy here, but I will sell in here. I will sell here now. As this thing cross again here, I will sell. I will have come to break even before the price turns back to the upside. Okay, if it crosses down, I will sell. Here now, I'm going to be selling at this candle. I will have come to break even. I will not make so much work because market has started ranging. You will see that market has started ranging. Market has started ranging between here and here. And I told you that this strategy does not work when the market is ranging. So now, but you can keep following because you don't know when the trend will start. You can keep following and be focusing on breaking even. Or when you see the market is ranging, all what I used to do then, and that's another strategy I traded many years ago, 8 years ago. See, 7, 8 years ago. Okay, that's another strategy. I remember this is the first strategy my coach even taught me. So when the market is ranging like this, you draw your box, properties, fill. You draw your box like this. Did you see this box? Now you draw your box. Let me change the color and the thickness. You draw your box like this, okay? And then you wait to decide where the breakout will occur. So breakout occur to the upside, you take your buy. If that one to the downside, you take your sell. But then now the red and the blue line, they have crossed the black line here from down up. They have crossed the black line from down up. Okay. If I enter a buy here, if I enter a buy here, guess where my stop loss is going to be? My stop loss will be here. This last swing here, my stop loss will be here, and then I'll start. Then my entry is when these two guys, you know, when these two guys cross the black line. Most likely is this candle that is forming, this particular blue candle, sorry, the green candle. Then I put my stop loss here. Then I'll start trailing my stop loss. As the swing is forming, I'm coming close, I'm coming close, I'm coming close, and then I'm coming close until the thing closes back on me. Or I told you, if you want to have another, there's one the trailing stop loss. That's the one that calls trailing stop loss. Now, this other one now is also trailing stop loss, but I'll be using candle when the reversal candle closes below my moving average 50, which is the blue color. Here now, I will close this trade. So I'll make profit from here. I'll make profit from here to this place. And that is how many pips is that? That is 4,782 pips. 4,782 pips. Or no, not or yeah, 4,728. Yeah, 4,720. PIP is synthetic index is different from currency indices, so they have very widespread. So now both of them have crossed the red and the blue line. They have crossed the black line from up down. I've been taking another sell somewhere. I've been taking a sell somewhere around here. When both of them cross like this, when both of them cross, probably if this candle that is forming, if this candle is one that is forming, guess where my stop loss will be? The last swing, the last swing here, and then I can be trailing my stop loss. If you want to wait until there's a reversal candle that close above 200 before you close, so you'll be closing your trade around here when a candle closes the above the uh, EMA 50, which is the blue color. Okay, that's for a down sell, and then it crosses back again. I'll be taking a sell. I'll be taking a sell. Don't forget I told you that the moment you take a sell here and the price move a little bit in your direction, the first thing you do is to come to break even. Just bring your stop loss to your entry price. Because just come to break even and let it roll. Okay, and so look at it now. It has crossed from that up here. I told you, to save a lot of errors, I will not take this trade now. Now, both of them have crossed the black line from down up. I'll be taking the buy and then I will be following it, follow the same rules. Now, here now, I'll be buying. I will not sell here because the candles are still above the EMA 200. But now, when both of them cross, I'm going to be taking a sell. Okay, I'll be taking a buy here. Also, I'll be taking a buy here. And look at it. If when this line cross, both of them have crossed now. Guess where my entry is going to be? My entry will be somewhere around here, and then my stop loss will be somewhere around somewhere around here. And you see, if I trade my stop loss, I'm still going to be in that trade till okay. If you look at the reversal candle closing, I'll be good. I'll be in the trade here. If I'm in the trade there, I enter again here. I enter if I'm in the trade, if you know, then I enter a trade again because that's crossed back up. The candle has crossed back up. Okay, sometimes I use the candle into the line. The cross back up, and then I'm entering another buy again. I'm entering another buy again. I'll follow it here, or I'll come out here. So it's either trading yours at every swing. When you're seeing swing, as you are seeing swing, you're pushing your stop loss, or you can say, okay, I've not closed my trade until I see another candle crossing below the crossing and closing below the EMA 50 when you are buying. Okay, so here now I've taken a sell here. This one I'm not sure if I'm going to make profit here. Either don't make profit at all, or you come to break even. Now both of them have crossed again. I'll be buying here. Okay, I'll be buying little here. I'll come to break even, and then you can see the market has started ranging here again. Market has started ranging here again. When the market is ranging, that formula may not work very well. That strategy may not work very well. And so you can see the market is practically ranging between here, and then it broke out, then it moved to the upside again. So when it broke out, you go to your buy, then I'm trading this stop loss now until there's a reversal closure, maybe here or here, and I come out of the trade. Then I'll be looking for both of them have crossed the black line from up down again. I'll be taking a sell. If I take a sell here, like for example, if I want to take this trade now, okay, I'm taking a sell, and then when both of them cross, I guess maybe it's this candle that is forming. My stop loss will be somewhere at the last swing. My stop loss is somewhere at last. This is 15-minute time frame. Then I will follow it. I will follow it. I'm most likely, coming out of this trade somewhere around here. I'm still in profit. Then it has crossed down again. Another entry. My new entry is here. New stop loss is here. I will follow it. I'll follow it. Maybe until it closes back up here. I'm still going to be in profit. So listen, if you can painstakingly, work this strategy out, I guarantee you, if you stick with it, just choose a single time frame. This is not on this kind of a trainer, you don't use top down analysis. Just choose a time frame. You can choose 5 minutes. I've seen some of you choosing 5 minutes and sending videos in the DM. Some of you are doing it on 15 minutes. So 5 minutes, 15 minutes, 30 minutes, 1 hour. It depends on your choice. Now, if your account is small, choose a lower time frame. Choose like 5 minutes thereabout is amazing. Then you can choose 15 minutes, 10 minutes, depending on it's all time frame, but whichever time frame you choose, make sure you stick to it so that even if you lose money, okay, on a trade, the same, and you get an entry again, you will make the money back. If you can stay with this strategy, I promise you, you will make money. It's a promise. It's a promise, bro. It's a promise, bro. And so it has crossed from that up. I'm going to be buying. I'm going to imagine I've been buying from here, blah 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 blah. Either I close here, or I close when the reversal candle is forming here. Okay, and you buy again. So let me also show you step index 200. Step index 200. Okay, where step index 200 here? Step index 200. You can see the red line has crossed the blue line from up down. I'm selling. I'm selling. I'm selling. So do you know that this trade alone, from here to here, can buy you a car depending on your lot size? I'm telling you, from here to here, this step index 200, the spread is massive. The spread is crazy. This step index 200 from here to here can buy you a car. It's all about lot size. It's all about lot size. And so it has crossed. I'm taking a sell from here now. So my sell, my entry will be somewhere where did they cross? They cross maybe latest somewhere around here. And what price is that? That is the 10194.8. Okay. So guess where my stop loss is going to be? The last swing here, or most likely, if it were you, conservatively, I'll be placing it here, not just here. And so the price is going down, is going down. Imagine if you follow this second strategy of taking of exiting the market. This is where you will come out of the market. But you follow the first strategy with trailing stop loss, 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 trailing stop loss. Okay, and then you exit the trade because market will try to close it because you'll be shifting your stop loss you'll be shifting it, you'll be checking the price and be modifying your trade that's already ongoing. Some of you don't even know how to shift stop loss. Don't worry, I'll teach you all of that, but it's very simple. Or if you can click and drag on MetaTrader, you can click it and drag it, click it and drag it to the price that you want it to be. Now you'll be moving your stop loss towards it. So what happened then is that when if eventually the trade close against you, your profit that you've already locked will be added to your account balance, and you can go and then you can go and withdraw it and then use the money to buy Ferrari. Use the money to go and buy Ferrari. Okay, now here now, okay, it has crossed. As it crossed now, as it crossed, both of them have crossed there. I'll have entered a buy here, and then the price move up a little bit. At least I'll have broken even, and then, like that. This is stepping next 200. It has crossed from up down, crossed from down up, and then from up down again. If you spend time, up again, though, it has crossed. Both of them have crossed the black line from down up. This is going to be my entry when they were crossing. My entry when they were crossing is most likely around here, and then I can trail my stop loss. And first of all, my stop loss will be the last swing. Then I can trail my stop loss, push it there, and push it there, and push it there, and push it there. Probably the market closes me out from there, and then like that, like that, like that, like that. Let me check volatility 25. Volatility 25. This is volatility 25. It has crossed from up down. I'm making my sell. It has crossed from down, from down up. I'm making a buy. Okay, I may not make so much profit there, but I will have come to break even because as soon as price move in my favor a little bit, I come to break even. And so both of them have crossed the black line from up down again, is a sell, and then both of them have crossed the black line from down up, and then it is a buy. It is a buy. It is a buy. And then you see this buy again. There's a short buy here again, and the price broke down here. Both of them did not cross it, so we're not going to be doing anything. Then now they are at the candles are at the top part of the EMA 200. So every cross from that up of red line to the blue, I'm going to be taking a buy. So the red line I cross the blue line from that up, I'll be taking a buy here, up, 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 or then I will buy here again. I will not sell here. I will buy here. I will buy here. Market is still going. I will not sell until both of them have crossed. Now look at this miracle. Both of them have crossed from up down, and I've taken a sell. My sell will be somewhere around here. Okay, at this price. At this price. What in the world is this price? 12436.352. 2436.352. And then guess where my stop loss is going to be? My stop loss will be the last swing. My stop loss will be here, and then I'll be trailing stop loss. Move it, 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 and then price will take me out of this place. Or if you have the alternative, which also I think is similar, when the price close above, when the reversal candle close above the EMA 50, and then you'll be taking an exit from there. You'll be taking an exit from there. And so like that, like that. Both of them have crossed to the upside, you're going to be taking it back. Both of them have crossed to the downside, you're going to be taking is so let's check another currency pair. Let's check a currency pair this time around. USD JPY. USD JPY. Look at USD JPY. The red line and the blue line cross the black line from the hand up. You will buy. Look at it now. I'm going to be buying from here. When you buy from here, where is going to be your entry price? Your entry price is somewhere around somewhere around here, and then your stop loss will be the last swing. Then you can trail your stop loss, 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 trail your stop loss until you get to this place. And guess how many pip that is? That guess how many pips that is? That is 146 pips. 146 pips. Then both of them have crossed from up down here now. They have crossed from up down. You're going to be looking for a sell. Again, I'll be looking for a sell here again. And then I will not buy here now. Okay. I also be selling. Both of them across the black line from up down. I'll be selling. So that is the power of this moving average. In the next class, I'll be combining it with ADX. I will give you confluence, and that is the combination is more powerful. The combination is more powerful. It will give you more money than when you use them independently. And I promise you're going to make stupendous profits. Stupendous profits. So if you have questions from what I've shared right now, just let me know. Not in the comment section, but in the WhatsApp group. In the WhatsApp group. But if you are not in the WhatsApp group and you're watching this video, drop your question in the comment section, and then um, make sure you stick to one single time frame. That is the beauty of of the moving average. Except you want to like do price action, and then you just use the moving average as complementary. Okay, so that is that about this class. I will give you another training.